अब हमारे साथ है ग्लोबल इन्वेस्टर और पब्लिशर ग्लूम बूम और डूम रिपोर्ट के मार्क फाबर। चलिए सबसे पहले आपको हम ये बता देते हैं कि क्यों आपको सुनना चाहिए मार्क फाबर को।
1987 में ग्लोबल स्टॉक मार्केट का क्रैश, सन 2000 में कच्चे तेल और मेटल कीमतों में उछाल, 2013 में आर्थिक मंदी की वापसी और 2015 में सोने में 30% का उछाल। इकोनॉमी और स्टॉक मार्केट की ये वो अहम घटनाएं हैं जिसकी भविष्यवाणी मार्क फाबर ने पहले ही कर दी थी और निवेशकों को जमकर पैसे बनाने और पैसे को सुरक्षित रखने का मौका मिल गया। इसलिए जब भी दुनिया में कोई आर्थिक संकट आता है या कोई बड़ा इवेंट आता है तो जी बिजनेस बात करता है निवेश गुरु मार्क फाबर से। शेयर बाजार से जुड़े दिग्गज भी मार्क फाबर की ग्लूम बूम एंड डूम रिपोर्ट का बेसब्री से इंतजार करते हैं। 72 साल के हो चुके मार्क फाबर हांगकांग में रहते हैं। मार्क फाबर लिमिटेड के डायरेक्टर हैं, लेकिन भारत समेत पूरी दुनिया की इकोनॉमी पर पैनी नजर रखते हैं। खास तौर से भारत जैसे इमर्जिंग मार्केट्स की इकोनॉमी की नब्ज पहचानने में फाबर को महारत हासिल है। मार्क फाबर 1946 में स्विट्जरलैंड के ज्यूरिख में पैदा हुए और पढ़ाई लिखाई हुई जिनेवा यूनिवर्सिटी से। फाबर इकोनॉमिक्स में पीएचडी हैं। वर्ल्ड इकोनॉमी के बारे में लिखी गई उनकी किताबों टुमारोज गॉड, एशियाज एज ऑफ डिस्कवरी, राइडिंग द मिलेनियल स्टॉर्म, मार्क फाबर्स पाथ टू प्रॉफिट इन द फाइनेंशियल मार्केट्स और द ग्रेट मनी इल्यूजन, द कंफ्यूजन्स ऑफ द कंफ्यूजन से पूरी दुनिया ने न सिर्फ इकोनॉमी और मार्केट की समझ में उनका लोहा माना, बल्कि हर बड़ी घटना के बाद उनकी राय जानने को अब भी बेताब रहती है। फिलहाल दुनिया के सामने संकट है ग्लोबल ट्रेड वॉर का। दुनिया की दो इकोनॉमिक सुपर पावर चीन और अमेरिका आमने सामने हैं, लेकिन संकट पूरी दुनिया में दिख रहा है। आगे की राह कैसी है? भारत के लिए चुनौती कितनी बड़ी है? इसी पर आज हम जानेंगे मार्क फाबर की राय।
Mark, thanks so much for being with us on Zee Business today. The markets have corrected quite a bit since the end of January. In India, we've seen a cut of about 9.5%. The Dow Jones is down 8.5%. Do you think this is the start of a bear market, or do you think the correction is done?
Well, I think that if you go into a bull market from a low, you don't really know that it's a bull market until maybe a year later. And if you're at the major high, you don't know whether the major high has been reached or whether that's just a correction. I'd say this: short term, we may be somewhat oversold. Not enormously, but somewhat oversold. From a longer term perspective, we are nowhere near oversold. We've rallied in the US on the S&P from 666 to a high January 26 of 2,872. So if we're down 10%, it's nothing in comparison to the bull market. And the second point that is important to realize, when the market went down in February after January 26, actually retail investors were net buyers of equities, so they were not negative. I'd like to see more negative sentiment. That hasn't really taken place yet. So I think the market still has, at least if it's just a correction, then another 10% downside risk. I'd say that would be also the case for India. But the problem in the US is that if the market drops another 10%, it could very well also drop 40%, because as the market goes down, the earnings will disappoint and the fundamentals will suddenly not look all that great.
Mark, what are the positive triggers or positive risk for the markets? Because yes, growth in the US is firming up, but everybody is worried about the threat of a trade war. It doesn't add to positive sentiment at all. There are worries about the level of debt that is there on the balance sheets of many countries, and the US doesn't seem to be really scared about a default at all. The interest rates are only going up higher there. What is the good news that will take the markets higher in the long term?
Well, that's a very good question. Why should markets go up in the very long run? I mean, if you look at the last 100 years in the US or so, the trend of markets has been on the upside, but it's also been on the upside because there is built-in inflation in the system, and the level of credit, in other words, debts, have been rising steadily, and money supply has been growing. And more recently, in the last 10, 12 years, the money supply has been growing rather strongly, and the expansion of central banks' balance sheet has been very high. So I think there are reasons for stocks to go up in the long run. The way in India, if you bought properties 30 years ago, you would have to really make a huge mistake that these prices wouldn't have risen. So the trend for real estate prices is also on the upside, and the price for art is on the upside because we live in inflationary times. Now, the inflation is a very complicated phenomenon. You have sometimes inflation in commodities, and sometimes you have it in consumer prices. The last 20, 30 years, we had more moderate inflation in consumer prices, but we had very high inflation in asset prices, stocks, bonds, commodities, real estate, collectibles, wines, and so forth. All this has gone up a lot in price. And I think, if I look back at the time when I started to work in 1970, at that time, salaries were relatively high compared to assets, to asset prices. In other words, in America, as an example, the market capitalization as a percent of the economy was just 30%. Now it is over 150%. So what we have had in the world is an explosion of asset prices, and now, instead of the economy driving asset prices are driving the economy. And I think we could have, if the S&P drops, say 20-25%, then it will have a very negative impact on the economy.
What is the chance, Mark, what is the chance the S&P is falling 20-25%? What's the good news? There isn't any, actually. You know, you said inflation is creeping up. Well, central banks have been begging for inflation. But inflation really hurts countries like India, which are large importers. I'm still trying to see that good news. I don't see much.
Yeah, but this is the point. I think you asked me just now, what is the probability of the market dropping 25%? I think the probability is actually very high, maybe 90%. But we've gone up in a straight line between February 2016 and today. Until this January, we never had more than a 3% correction in the S&P. This is the longest stretch of a market going up without even a 3% correction. So we've gone up a lot. What is the probability of it dropping 20-25%? I think it's very high.
Okay, but if the S&P is let's assume it falls 25% from the peak it made in January. What does it mean for the Indian markets? Because India runs a large current account deficit. We are already taxing capital inflows. There is an election coming up. Usually, Indian markets don't correct when an election comes up. But the odds seem to be against the markets going up this time in India.
Well, let's put it this way. Around the world, pretty much everything trades around the S&P. So if the S&P tonight is down, I'm not saying it will be, but if the S&P is down 10% in 1 week, the likelihood that other markets are also down is very high, because fund managers today invest internationally. So they see the US market going down. The other markets may not have gone down yet, So they start selling there to rebalance their portfolios. The same for index funds. And as I said before in earlier interviews, I am optimistic about India in the long run. But there are some conditions that have to be met. We need less bureaucracy. We need a more, say, institutionalized government that is more professional. But that is also the case in the US. So I'd say, everything considered, I'm still quite optimistic about India, but I'm not optimistic about the stock market, because the stock market in 2016 was below 23,000 at the March low. And now we went to 36,400. And I think a 20% correction would not be unusual.
So would you say the Indian stock markets are more vulnerable than the emerging market peers because of local conditions, because of taxing capital coming into the market, because of rising inflation, because of the risks surrounding the elections? Are they more vulnerable than their peers?
Not really. I mean, I think the Indian economy is a relatively stable economy that does not depend all that much on exports. It's not export dependent like Taiwan, South Korea, and to some extent Singapore, Hong Kong. But I think the problem for India is if other markets go down, it will also be dragged down. Number two, the political situation, as you know, I don't think it's so bad, but it's not brilliant either. Mr. Modi, who I kind of admire, certainly everything is relative in this world. His intellect is a little bit superior to what we find in the US among politicians. But the perception among foreign large investors is that the political situation in India is still unstable. Maybe, but maybe less than in Europe and in the US. So, as I said, relatively speaking, I'm quite optimistic about India. But obviously, if the markets around the region and in the world go down, then India will also be dragged down. And then the second point I'd like to make, the Indian stock market consists of, say, a large number of shares. I don't know, 5,000 or 10,000 shares. And some of these shares are very expensive. They sell for 45, 50 times earnings. I don't think that these stocks have much upside potential. Other stocks, they are reasonably priced. They have a lot of upside potential. So I think that active manager in India who is stock specific, he will do okay. I don't think the index will do very well because the index is heavily weighted towards these high market cap weighted stocks.
All right, Marc. Many thanks for joining us on Zee Business.
Thank you.